Well, how's it going, friends and family? My name is Amos, and today we have another stock analysis request from a viewer like you. We're going to be talking about strategy. Ticker symbol MSTR. Take a look at your screen right now. If we just zoom out 6 months, down 60%. Past, 1 year, negative 53.8%. Into the red, mind you. But if we zoom out 5 years, I think that's where the story changes. 182% in the past 5 years, which I would argue that's not a bad ROI, considering in 2022 they were $22. 2023 they were roughly like $30 or so. 2024 they were, I guess, at a high of $63, and then towards the second half of 2024 they were like $150. So if you only consider a year and a half or so, this is a terrible performance. But then again, it begs the question, is it all over for strategy? Are they going to $100 a share and then after that $80 or $50 a share? Or is this the buying opportunity? So I'm going to tell you up front that this one's going to be a little different from my usual quantitative analysis of stocks in general, because with strategy, you can't really analyze and judge them by their revenue, by their net income, let alone their free cash flow or dividend profile. And because of that, I hope you can understand it's going to be a little less numbers and more so a dissection of the business operation and model itself. So when it comes to strategy, the name that you have to be familiar with is Michael Saylor. He's the executive chairman as of right now. He founded a strategy in 1989 as a data analytics company. He took it public in 1998, right before the dot-com bubble crash. And then in the next 2 to 4 years, he ran into a lot of trouble with the SEC. And today, their software pretty much does the exact same thing. It helps people make interactive dashboards with their data, much like Tableau from Salesforce. I was taking a look at the product offering from Strategy on their website. I was like, dude, that looks exactly like what Tableau can do. But having said that, you do not buy Strategy for their legacy business. You buy Strategy because they're a Bitcoin treasury that's trying to accumulate as much Bitcoin as they can. Which takes me to the next point. So what exactly does strategy do, and why do people feel bullish about them? So you can think of strategy as a Bitcoin buying machine. So while physical gold is valuable because it's scarce, there's a finite supply, strategy takes it a step further. They even utilize debt to buy Bitcoin faster than anyone else. And over time, this should translate to more Bitcoin per share outstanding, and that's the value proposition in a nutshell. So just like with Tesla and Elon Musk, I think strategy is just one of those things where you either buy into Michael Saylor's vision and investing thesis, or you think all of this is a load of crap. And I think in general with Bitcoin, you either get it or you don't. You think it's a scam. However, in 2025, over 100 companies have added Bitcoin to their balance sheets. So it's gaining more traction. But circling back to how strategy is accumulating a ton of Bitcoin, if one day Bitcoin in fact gets up to $1 million a piece like Michael thinks it will, and they hold roughly 4% of all Bitcoin, that's the forecast by the way, that means on paper, they're going to be a pretty valuable company. But having said that, Bitcoin's journey to $1 million a piece, it's not going to be a smooth ride. If anything, it's going to be a super volatile roller coaster one. Because if you take a look at Bitcoin, right now they're 89,500, but if you zoom out roughly 3.5 to 4 months ago, they flirted with $125,000 per Bitcoin. So to go from that, let's see what we could do, down to what it is, 89,000, Bitcoin itself has dropped 27.7%. So who is to say that Bitcoin will ever reach $1 million like Michael thinks it will, right? However, if you just zoom out as a sanity test, Bitcoin itself, 161% into the green. At the start of 5 years ago, they were roughly $34,000 per Bitcoin. Now $89,000. If you do maximum timeline, we're talking about 19,600% into the green. I sure wish I could have bought Bitcoin back then. You know what I'm saying? I just realized with Google Finance, it only goes back as far as 2016. So if we take into account the entirety of Bitcoin's history since 2010, as recorded right here on this website, then the total return is 144 million%. That's a pretty ridiculous ROI, right? Can you imagine the dude living in his mom's basement in 2010 saying, dude, you got to buy Bitcoin for roughly 6 pennies per Bitcoin? I really wish that guy could have talked to me. I would have been buying as much Bitcoin as I could in 2020. I'll tell you that right now. So when you think about Bitcoin as an asset class, throughout the decades, it has defied the odds. Because I'm pretty sure the individuals, when they saw it hit $1 per Bitcoin, they were like, it can't go any higher. And then it defied the odds and went to $10 per Bitcoin. And then $100 per Bitcoin. And then eventually over $100,000 per Bitcoin. I get it, right now it's 89,000, but as crazy as Michael might sound, he might be onto something. Now, let's talk about the recent developments that's surrounding strategy. So, I tuned in and I listened to all of his keynote speeches that he has made at all of the various Bitcoin conferences that happened in the past 12 to 14 months. Come to find out, Strategy, they launched and they created digital credit from digital currency, their Bitcoin. And based on my understanding of the credit and bonds and notes universe, it's a game changer. So what am I talking about? When you give your money to Strategy to get the dividend from one of their credit vehicles, they use it to buy more Bitcoin. And instead of selling the Bitcoin to issue credit, they actually issue new stock and bonds to raise cash while using their massive Bitcoin vault as lateral, aka proof that they can pay you back. And so in the words of Michael Saylor, he created these digital credits for the people who would rather want a safe high yield than the roller coaster ride of Bitcoin, but you still want some money parked into Bitcoin in a way. So to put it simply, Strategy pays dividends by diluting their shareholders. They do it without fail. They keep issuing new shares and preferred stock in order to raise capital. And then they use that capital to pay the dividends, which sounds ridiculous to me because other dividend-paying businesses, their dividends usually come from operating profits, but not in the case of Strategy. And this structure is a part of his long-term game plan in order to turn Strategy into a Bitcoin bank. At least that's how I'm understanding it to be. And that's the bull case, to elaborate on what we talked about earlier, because cash itself, it loses purchasing power over time. Meaning, your $20 back in 1989, it is not worth $20 in 2026. Does that make sense? But Bitcoin, on the other hand, in theory, it goes up in valuation over time, as we learned from the entirety of their history. And so if they hold a crap ton of Bitcoin, it makes their wealth go up non-stop. So what are the digital credit products that I'm talking about? Keep in mind, it's one company with many different associated stocks, okay? So MSTR, that's the one if you're trying to buy into Strategy itself. But if you want to buy into one of their digital credits, then you have 5 different options. You have Stride, which their dividend yield should be 10%. You have Strike, an 8% dividend yield right there. And then the international friendly one is called Stream. And you've also got Stretch, 11% dividend yield that's variable, it goes up and down. And then you also have Strife, a 10% dividend yield fixed. And as we just learned, the digital credit's purpose and existence is to fund money into buying more Bitcoin for this one right here, MSTR. So if we look up, Stride, it'll be listed as Strategy, but its actual name is Stride. Dividend profile right there, 7% dividend yield. Past 1 year performance, negative 10%. And if we look up another one, STRC, which is Stretch, and we jump on over to their dividend profile, 11% dividend yield, it pays out every single month. Take a look at their timeline, it's up in the green, 13%. So it really depends on the digital credit itself. And you want to keep in mind, unlike other bonds and credit vehicles, they're all listed on the NASDAQ. And I listened to him talk about and explain that it's to make it more accessible to the common person. So they're all listed on the NASDAQ exchange, and they're supposed to behave like a bond where your principal should be stable. in theory and in a perfect world, because as we just learned, sometimes it goes down by 10% and other times it goes up by 13%. So it really depends on which one you buy into, I guess. And now let's go ahead and talk about the cheese situation with strategy. The first bullet point says year 2035. Reason being is that the current forecast is by the year 2035, Bitcoin as an asset class will be worth more than physical gold. That's something that Michael Saylor sings at the top of his lungs. Now, why is this? If you think about it, right now we're currently in a digital gold rush, which means there's a bunch of different individuals in China, in Nigeria, in India, and even publicly traded companies like Mara that are trying to mine Bitcoin. And so based on current projections, in 2035, 99% of all Bitcoin to ever circulate the world will have been mined. So 2035 is a really important year to know when it comes to Bitcoin. How many? The next bullet point says 21 million Bitcoin. That's it. No more will ever exist. It's only going to be 21 million from now until the day all of this is over. So I'm a pretty big history guy, especially North America. Currently reading a book called Bury My Heart at Wounded Knee by D. Brown. Halfway through it, dude. The early Americans and the Spaniards, they did the Native Americans so wrong. But anyways, if you think about and reflect on history and what motivated the Spaniards, the Portuguese, and later the Americans to cross continents and to go through really dangerous terrain and weather, it wasn't for comfort or even certainty. It was the prospects and the promise of perhaps it could be there, the scarce and newly discovered gold. That shiny metallic stuff that everybody in the old world used to fantasize about. But what makes all of that really silly to me is that when you think about it on paper, gold and silver, they're not valuable. We as humans, we're the ones who gave it value. But I think it also makes sense because it's finite. There's unlimited supply. And even the whole idea of extracting it is difficult, let alone the discovery process. And that's what led to a lot of ghost towns that happened in the West Coast, right? In that rush to find gold. So that's how I kind of think about Bitcoin. It's the digital gold. And as humans, we're giving it value. All that to say, Strategy right now, they own 3.4% of all Bitcoin outstanding. If you follow Michael Saylor on X, he usually gives updates as to the progress of Strategy's acquisitions of Bitcoin. And most recently, on January the 20th, they acquired 22,305 Bitcoin for $2.1 billion at about $95,000 per Bitcoin. As of right now, 89,000. So on paper, he did overpay for them, but to him, it doesn't really matter because in the future, if it's going to be $1 million, to buy it at 95,000 is a great deal to him in his logic and worldview. But in total, Strategy owns 709,715 Bitcoin. Average price, $75,979. And for the third bullet point, I have the illusion of value. Because what happens if collectively, as a society and investors, we dismiss Bitcoin the exact same way that we did with NFTs? Do you remember like 5 years ago, people were hyping up and going crazy about digital artwork? I never really bought into that. And you fast forward now, dude, NFTs are worthless. And if we're going to be honest with one another, there's a handful of you that are watching this video right now, and that's your take. That's how you feel about Bitcoin. And I'll be quite frank, that's a fair concern. That's a valid call out because with physical gold, it's in your hand. You can see it. You can turn it into a ring, a necklace, whatever. But with Bitcoin, it's a digital gold. And because you can't really feel it or see it, it has less value. I can see that logic. But with Bitcoin, it's supposed to be the currency of the future. Whereas with physical gold, it just turns into a fashion accessory. But I guess it doesn't really matter because at the end of the day, they're both worth a lot. There's a finite supply, and we as humans prop it up and give value to physical gold or the digital gold, so whatever. But on that note, if point 1 and point 2 are to be true and factual, then why is Strategy selling off? If they're accumulating more Bitcoin, and in the future, Bitcoin's supposed to be worth more. I think that's partly because of their legacy business, the software, and software in general, they're all selling off. Even Microsoft's getting sold off. Adobe, Intuit, Duolingo. And I also think it's because the valuation of Bitcoin itself has also dropped by a lot, from 125,000 down to 89,000. And because they're holding something that went down in valuation, I think the stock market's kind of punishing them. I guess it's a two-pronged approach, because it's a software company, I guess the legacy business, but also the valuation of what they're owning, that asset, has decreased. So when it comes to calculating an inherent worth for their stock price, it's impossible to use the dividend discount model, to use the GARP formula that I created, or to even use the free cash flow analysis model. So after doing some reflective thinking while showering naked, I decided I think the best way is to do a modified net asset value breakdown. So right now they own about 709,715 Bitcoin. I say about because by the day, by the week, that number is going to go up, right? And the current price for Bitcoin is $89,595. So not even taking into account their software business, if we multiply these two numbers, then the total asset value of Bitcoin is $63.5 billion. Now, if we take that number and we subtract by their total debt on the books, because remember, they take on more debt and issue more shares in order to raise that capital to buy more Bitcoin, but also to finance the dividends itself. Dude, it's a crazy idea. The reason why the dividend yield is so high at like 8, 9, 10, 12% is because in theory, in a perfect world, Bitcoin goes up by 30 to 45% year over year on a conservative estimate. So after you take away the dividend yield of like 10 or 12%, you're still walking away with like a 38% ROI with Bitcoin itself. And I think the logic is to pocket the difference, because 10 to 12% is nothing when your asset is compounding at 40, 50, 60% year over year. Anyways, if we deduct their total Bitcoin valuation by their total debt, $8.2 billion, that gives us an equity value for the company of $55.3 billion. And we're going to divide it by the amount of shares outstanding. And that's going to be roughly 283.5 million shares outstanding. And while we're here, let me just take a look at it, right? They're issuing more shares year over year at a rate that'll make your head spin. They're diluting the shareholders by 50% year over year from 2024 to the trailing 12 months. Not a good look, but they're thinking it's peanuts compared to what this company's going to be worth in the future. So we might as well take on as much loans as we can right now in order to get this digital gold in our books. It's kind of like the Cleveland Browns, how they were willing to give away everything. First round picks plus excess capital in order to acquire Deshaun Watson, because they were like, I don't care, just give them everything they want so we can take Deshaun Watson. I think it was from the Houston Texans, right? Look how that panned out. I'm not trying to say or insinuate that Bitcoin's going to follow the same path, but that's the logic of Michael Saylor. Give whatever it takes in order to buy the Bitcoin that's mined at whatever the market rate is, because it'll be worth more in the future. But on that note, I will say Cleveland Browns, they probably had the best rookie class from the previous year's draft. I think the only other one that could give them a run for their money is the Seahawks. Dude, we nailed it. We hit a home run with Gray Zabel. Don't even get me started on Nick Imamori, the safety, or Torrey Horton. Dude, such a good draft class from the Seahawks. Circling back to their fair valuation, if we divide it by the shares outstanding, 283 million shares, then on paper, they should be $195 if you only take into account the valuation of Bitcoin and disregarding their software line of business. However, that's if Bitcoin stays stagnant at about $89,000 and it does not change in valuation. It could absolutely go down or it could go up. But when it comes to buying stocks, you usually pay a premium for their future operations and future gains, or in this case, for an appreciating asset. So having said that, let's try it again. Bitcoin, they did flirt with $125,000, $126,000 matter of 3-4 months ago. So with that future prospect of potentially hitting that 125 number again. So we're going to do the exact same thing. We're going to take the $88.7 billion, deduct it by $8 billion of total debt, which would change their equity value to $80.4 billion. Let's just do that very quickly, 310. And we divide it by the shares outstanding. Then they should be fairly valued at $283. That's with the future prospects of Bitcoin hitting $125,000 again. So on paper, by buying strategy at $163 a share, that's a fat bargain and a discount. By the way, please keep in mind this is not financial advice. We're just doing this for entertainment purposes. We're all being stupid and we're all being delusional. How about we feed into this delusion and we play along with Michael Saylor's vision? So he's proposing that Bitcoin in about, what was it, like 6 to 8 years from now, should be $1 million a piece. Now, if that is the case, then that drastically changes the equity value of strategy because they're holding on to shares of Bitcoin at the average price of $75,000. And for that to grow to $1 million a piece, then we don't even have to do the math to understand that they're completely undervalued right now. But let's just go ahead to see what we're going to be working with. And we divide that by the shares outstanding. On paper, they should be $2,474 a share in the future if Bitcoin pans out to hitting $1 million a piece. And that's if the amount of shares outstanding stays the same at about 283 million, which I know it will not. It's probably going to be a bigger number, like 400 million by then. Unless by 2035, they run out of Bitcoin to buy in circulation, because at that point, the supply will be so low that they might not be the best bidder. And maybe they'll start selling their Bitcoin for a ridiculous premium, right? $1 million is the market rate. They'll probably sell it for like what? 1.5 million, a markup of about 50%, buy back some shares. I don't know. Obviously, all of this is speculation. We don't know. Bitcoin, for all we know, could hit $20,000, let alone $1 per Bitcoin. It could also go the other way, go up to $1 million. It's a very volatile asset class. It's not for the faint or weak-hearted. It's not for the people that want to watch their brokerage account every single day. Like, Bitcoin is just one of those things where you buy it, you leave it the heck alone and forget about it for 10 years, and you come back and you're like, whoa. So when it comes to strategy, let's go over my game plan. After spending a crap ton of time learning about this company, because I already had pre-existing knowledge of Bitcoin and how it works, do I love what strategy is trying to do? So personally, I like Bitcoin. I'm pretty bullish about it. Then again, as an investor, I hate the idea of investing into anything that does not generate revenue. I feel like that's a big fat lie because they are generating revenue. It's going in the wrong trend, right? 2015, their software business used to generate $500 million, and now it's $474 million. I think it's crazy how it still is kind of stabilized, but needless to say, with those kind of percentage changes year over year, negligible. So they're not really growing their revenue and they don't really create free cash flow. I would argue it's probably negative. Yeah, their free cash flow is negative because they use everything, everything they have on the books in order to buy more Bitcoin. As an investor, I don't really like that, right? And I'm not trying to come off as a negative Nancy from Stranger Things, but look, even Michael Saylor, the biggest Bitcoin bull, he said it himself that it's probably better to just buy Bitcoin. Because truthfully, strategy, dude, it's a middleman. What I'm trying to say is now that we have Bitcoin ETFs like iBit, for instance, the BlackRock version and Variety, what's the point of having a middleman? And they're not the only ones, by the way. As you can see on your screen right now, almost every major financial firm, they have their own version and flavor. Fidelity, Arc, Cathie Woods has her own version, Invesco and Roundhill. Plenty of options, right? So the point that I'm trying to get at is if you want exposure to Bitcoin, you could just literally buy this ETF iBit and get it right there in your brokerage account without having to mess with any crypto exchanges and wallets. Back in 2020, yes, the options were limited. You almost had to go through MicroStrategy in order to get Bitcoin through a normal traditional brokerage account, but now it's more accessible and it's widely available. But Michael does also say that if you want to buy into his vision, then strategy gives you the upside of Bitcoin, but also buying into his future. just like how a lot of investors buy into Elon Musk's Tesla, because as amateur investors, we can't invest into SpaceX or the boring company. So by putting your money into the only publicly traded thing that belongs to Elon Musk, you're kind of exposing yourself to all of that, but also with the promise of robots being rolled out by their factories, not just EVs. Then again, friends and family, look, I understand the math and why they're doing what they're doing in order to buy more Bitcoin, issuing more shares, creating digital credits and everything. But I just can't get past the idea of strategy diluting the shareholders nonstop year over year. Because as a publicly traded stock, it seems to me like there's absolute disregard for the current shareholders. Because this is not what you want to be seeing, right? Because as a current shareholder, the piece of the pie that you own, it gets smaller and smaller and smaller as they keep issuing more shares. So, not really a fan of that. But then again, if Michael's correct and his vision pans out and the execution is flawless and in the future he's the biggest corporate company holder of Bitcoin itself, it's going to be too late to buy into strategy in 2034. Because the next year it's going to be announced like, oh my gosh, now there's only like 0.09% of Bitcoin left to be mined. It's going to be a fight. But if we take a step back, pull up our pants and think about it, that's pretty much gambling. And my whole thing is, why can't Michael just laser focus on developing a product or a service that prints cash and then utilizing that free cash flow to buy the Bitcoin? If he did that, dude, I'd be so freaking excited. But with their current model, I'm just not a fan. Yes, I understand the logic of I'm trying to accumulate as much digital gold as I can because in the future it's going to be priceless. It's going to be worth 20,000 times more than it is right now. So what does it matter if I'm paying $89,000, $95,000 per Bitcoin? I get the logic, but for the shareholders of strategy, it's kind of like a big slap to the face, right? Which essentially is tackling on more debt in the short term to finance this Bitcoin frenzy, right? It's like, But I'll be honest with you, if you understand how to leverage properly, tackling on debt to make more money, it shouldn't really be a bad thing. And in the case of strategy, what you have to understand is if we jump on over to their balance sheet and take a look at their total debt, I mean, we already learned, right? It's $8.2 billion. Their total assets of just Bitcoin itself, it's about $63.5 billion. So it's a splash in the bucket, right? Not that big of a deal, their debt scenario. And to prove my point, if you take a look at their debt to EBITDA ratio, it's a 0.75. It would take them roughly 9 months to pay off all of the loans on the books with their own core operating profits. So when it comes to strategy, where does that leave me? I thought about this long, and I thought about it for a while. Me, personally, I'm going to pass. The idea of having a middleman between me and Bitcoin, you know what I mean? I get it that he's going to have a huge vault of Bitcoin and in the future it should be valued 10 or 20x. I get it. But I would rather just buy directly Bitcoin itself. And that's why I have been buying a Bitcoin ETF. And to be fully transparent, it took me a really long time to open up to the idea of buying Bitcoin because I'll have you know this. There's a story time. Back in 2019, I was in grad school pursuing my MBA. One of my classmates, dude, he was swearing by Bitcoin. He kept screaming at us, literally, to get in before it's too late, right? So if you take a look at the valuation of Bitcoin in 2019, it was like $3,800, roughly up to $4,000-ish. Most of my classmates and I, we pretty much had the same opinion. We were just herd. We were a sheep. One person was like, I don't know, it looks kind of stupid because it used to be like $15,000 and it crashed all the way down to freaking $4,000. I don't think it's a good idea. And then one person said it and the next person agreed. We all started nodding our heads and even I dismissed it. Because back then I was like, dude, I don't know, Bitcoin, it seems a little too scary, a little too risky. But what I'm trying to say to you is, had I just acquired as much Bitcoin as possible back then in 2019, look at what would have happened, right? My investment would have gone up by 2,100% into the green, but I didn't do it. And that's why now I'm trying to reverse course and slowly acquire some more Bitcoin, because past performance is not indicative of future gains. What I'm trying to say is just because it went up here and then it crashed and then it recovered and then it crashed and then it recovered, crash, recovered, crash, recovered, doesn't mean it's going to happen again in the future, right? It can crash all the way down to $1 per Bitcoin. And for some of you, you're probably arguing that. You're like, dude, Bitcoin will never be $125,000 again. But I'm sure the exact same people said the exact same thing when Bitcoin reached an all-time high back in 2021 of about, $50,000 per Bitcoin, or I guess 58,000. And then it crashed and they were like, I told you I was right. And then it went back up and then it crashed and went back up and it crashed. For the past like a year and a half to 2 years, every time it does crash, they recover and reach an all new time high. In just the past 10 years, when we take a look at the valuation of physical gold, right? 2016, roughly $1,234 per ounce, I think. You fast forward throughout the years, they went up, they crashed. They went up, they had a small correction dip, and one could even argue they crashed. And then they started going up and up and up. And if I zoom out to the entirety of gold's history, which they won't allow me because I have to buy a membership, the valuation of gold has defied the odds and they continue to climb as well. Obviously, there's stretches of time where it's flat or when it goes negative or into the red, but over time, the valuation of gold has gone up. So, gold is a physical capital. Real estate is property capital. So even real estate itself, 2009, 2010, a lot of people's homes, their valuations crashed by like 50, 80%. And then during the pandemic in 2020, 2021, they finally hit the same valuations they were back in 2009. And then they reached all new time highs. So even real estate has its highs and lows. Point that I'm trying to get across is Bitcoin is digital capital. I think when it comes to any type of capital, there's highs and lows baked in. That volatility is the price that you pay for the ROI. Now, having said that, with real estate and physical gold, you can absolutely see it, touch it, feel it. You can even take a piss on it. With Bitcoin, it's digital. You can't really see it or feel it. It could all be a scam, and one day, collectively, we could say it's worth nothing. That's also a possibility. That's why please do keep in mind, this is not financial advice. Me personally, I just don't want to make the same mistake that I did in 2019, and that's why I'm slowly dabbling in Bitcoin. I'm not encouraging anyone else to follow me. I'm just telling you my story of why I decided to do it. I would argue outside of the realm of Bitcoin, I pretty much invest like I'm a 55-year-old, maybe even like a 61-year-old with a pension heading my way, Social Security checks. I try to invest in a pretty conservative fashion and manner, especially with my risk taking. So my question to you is, what do you all think about strategy or even Bitcoin in general? Do you believe in it? Do you think one day we're going to realize, like, dude, this whole crypto thing was all nonsense and was ridiculous and it'll go down in history as one of the biggest Ponzi schemes? I don't know, right? But before I get out of here to edit this video, I wanted to give a dedicated shout out to Lee for contributing to the diaper fund. I appreciate it. Thank you so much. Which, funny enough, the same individual that requested this stock analysis. So I really appreciate you for supporting the channel, but also my newborn. Thank you. But that gratitude also extends to the rest of y'all that watched this video all the way through. Thank you so much. Having said that, stay safe, good luck in the stock market, and love you!